So the market ran up in here, took out the high, broke, lower, traded higher, inefficiency, bearish order block right there. Price breaks. We want to see what? We want to see proof that it wants to go lower. What would that look like? A breakaway gap right there. Did that fill in? Did it even reprice to it? No. So this is a good signature to have to anticipate that we're really strongly in contention to run these lows out here. And we did so. Come back up, trade into this low. Why is this low now supposedly support after support broken now becomes resistance? That's the theory, right? That's what everybody learns in the books. Why did it work right here? Why did that happen? It has nothing to do with this low. What's over here? Everything in here gives you this and that. A PDA rate it's not traded to when I am allowing for it and my algorithm allows for it to trade to it normally. If it doesn't do that, the information and the insight that it gives is that means that I am absolutely bearish. That means that the market's really bearish if it can't trade up into consequent encouragement that wick. But if it does, it would need to do what? It would need to completely smash the shit out of it and keep it from going any higher. Because if this gives up the ghost, think about what we have. We have mean threshold of this down close candle. We have half of that range, which is 4343.75. Then we have the range of that inefficiency on the weekly chart, or not a weekly chart, on here. Then you have mean threshold here. So right away we have an agreement that there's two PD arrays saying that this is reasonable to trade to. But can it go beyond that and just like a mohawk or stab up there and still remain bearish? What would we have to contend with? It's this. Okay, so in my mind, it's perfectly acceptable. It's permissible. It's reasonable. It would not change the bearish tone that the market has. It can trade that much higher today, tomorrow, Friday, into next week, and still be bearish for me. Now, if we get a daily close above that 43.51 and a 3/4, that's problematic. Because why? That's 3 PD arrays that it's now going through. So if there's ever a gap or an inefficiency like a volume imbalance within a buy side or sell side imbalance or fair value gap, you have to incorporate the entirety of that because it's going to be meaningful. It's going to be impactful. As you can see, it's even went a little bit outside there. And then this order block here, the last down close candle prior to it moving higher, that is the change in the state of delivery, that candle's opening price. So you can incorporate that as well.